Well, Dave Chapman is here. He's Executive Director at BC Group, joining us from Hong Kong. And Dave, it's great to get you back on. It's been a while since we've spoken about what's happening with Bitcoin. And I'm curious to get your insight into what you think has actually driven this outperformance. I think since Bitcoin's halving, we've seen really a catalyst to the upside here that some say is hard to explain.
Understand, and thank you for having me today. It's easy to explain in one sentence. Digital assets aren't going away, and they're only getting stronger. Despite the initial multi-year reluctance, that's the stance that's now being accepted by traditional finance, and we're at that point where there is no going back. And look, there's many contributing factors as to why Bitcoin and other digital assets are rallying. Notwithstanding the current political and economic uncertainty, the ongoing concerns around COVID-19 and what the near and long-term effects that will have on the global economy. But the reality is that Bitcoin, among other digital assets, are continuing on the trend of being added to an investor's portfolio. And so once admittedly considered that it was an unlikely asset class to succeed, 2020 is really eliminating all of the previous arguments as to why one might not participate. And regardless of what those arguments were, whether they be regulatory founded, whether they be concerns around holding digital assets in a secure manner, or whether it be that this asset class really requires further legitimization and credibility through the participation of traditional financial household brands. What we're seeing is that all of those reasons are very quickly becoming discredited, and investors are realizing this, and they're seizing the opportunity as it's clear that the risk of going back from here is very, very low.
So I remember when you and I were talking when Bitcoin was up around 20,000 USD, so much interest, so much hype in this market. Then, of course, we had the great Bitcoin crash. Do you think Bitcoin is perhaps looking a little overbought here at around 12,000 USD or just below? Where do you think prices go next?
It's a really good question. Look, there's no denying that digital assets are volatile, but that's nothing new. But it also creates a significant amount of opportunity. We talk about the highs and lows of Bitcoin over the last decade. Bitcoin was the best performing asset of the last decade. As you stated, it's 70% up year to date. As you also stated, Ethereum is up over 200% year to date. For those that insist that the asset class is too volatile, my suggestion would be that they actually zoom out and consider the bigger picture. There are very few assets that have provided the type of returns that Bitcoin and Ethereum continually deliver. And I do find it a little entertaining when the critics continually cite volatility as one of the reasons why you wouldn't enter this asset class, even now, considering the United States printed more money in June of this year than in the first 200 years of its founding.
Hi, Dave. It's Matt here. I've been doing a fair bit of reading around there, and a lot of people are saying that the rise that we're seeing in Bitcoin is simply just a yield play. There is nothing else to it. It's not following gold. It is simply a yield play because, of course, when you buy treasuries, bonds, or whatever, you're getting hardly anything. What do you have to say about that?
I mean, look at the world right now. I mean, due to the declining global economy, as your viewers are very well aware, central banks worldwide are pumping hundreds of billions of dollars into the market, and they're doing everything they can to keep the credit flowing during this economic slowdown. And of course, it's yet to be seen whether this one-trick pony is actually going to work out for everyone in the long run. And it's as a result of this unprecedented QE that Bitcoin's superior and finite monetary supply once again comes into the forefront of discussion. Bitcoin, as everybody knows, it is limited in supply, and it does not fall foul of this endless money printing that we've become so numb and accustomed to. Where we go from here, I think it's probably an optimistic view, whether or not Bitcoin or another digital asset is about to replace everyone's favorite domestic currency. I guess in today's environment, I presuppose it's not such a crazy view to think that in the future something like that is possible. For now, however, we see Bitcoin and digital assets complementing the existing currencies and payment rails that are already in place today. In saying that, though, at OSL, we've positioned ourselves to be ahead of the curve, and we created this business fully confident in the knowledge of full global adoption of digital assets, and we're seeing that happen in real time. Another data point that your viewers might find interesting is that at OSL, we're observing a record number of account openings with professional investors looking to allocate a portion of their portfolios to digital asset safe havens such as Bitcoin and Ethereum. And personally, I think that's pretty telling.
Right, but we're almost out of time, but I just want to follow up on that. So as soon as we start seeing a normalization in monetary policy rates, the end of stimulus, does Bitcoin then head south again?
I don't think so. And the reason why I don't think so...
Why don't you think so?
Sorry. Sure. So for such a strong conviction, what we're seeing right now is an enormous institutional demand for Bitcoin and other digital assets. And frankly, that's what we've built our business around. Institutional adoption isn't coming; it's already here, and we know that at OSL because we're servicing this demand today. If people aren't convinced with our own data points, perhaps consider that the wider public are also seeing traditional finance scrambling to participate in Bitcoin and digital asset space. And these brands include things like JP Morgan, Nomura, State Street, Standard Chartered, Fidelity, and more. I personally think it's an extremely bold move to bet against these financial powerhouses who realize that this is the real first asset class in over 30 years, and the opportunity is simply too large to ignore any longer.